Welcome to TradeTheNBI.com. This is John. This report is for the 11th of June. Well, Friday was a continuation of pretty much the same, where we're retesting this ABM yellow line here from an ES standpoint, or the S&P, and reaching right up against the upper edge of the Fibonacci, or Morganacci as we like to call it, adjustment, because you see we decayed and we've come back up to it after that reset to the 50% and moved back up. So DLC readings, it's just sort of a mess right now. We did get the cyan moving back above green, putting shorts back into a more active role, as well as we have short-term buyers in steel falling. So all fairly weak setups. The advantage has been long-term buyers have kept this up, and that's because the new fund money came in. We saw the bounce, and we've been kind of testing back and forth, so it's not predominantly strong from that standpoint in any stretch of the imagination. We can see that we needed to see some of this evening out of the NASDAQ has been way ahead of the ES from that standpoint. In fact, almost developing a classic DOC spread here right at the conjunction point. So you've got red at minus 143, you've got minus 0.8 for the cyan. That clearly puts it right over. With the orange falling in that, it'll be interesting to see if we get a reset. Any pivot before should represent bigger declines, but it becomes easy because, again, you have the ABM yellow, 71.56 and a quarter, and below that, you definitely are safe to be short, and as long as you stay above, hey, the party continues. And this will bolster the S&P a little bit here. We got a rising euro. There's still quite a bit of flux from what's going on. You've got Brexit talks that are, the legislation is finally getting run through. You continue to have the Italy situation, and whether or not that will move towards what has been pretty fairly silent Greece setup could be an interesting explosion in there. However, we noted that given the damage, this has been a huge improvement from the shakeout. Don't get me wrong there, but it started to roll over right as we got towards the 38%. Came back, found support at the 23 on this latest move. We're in clear skyrocket here of shorts adding into this position. No short-term buyers, and the long-term buyers of what really has kept this modest momentum, but really it's what we would typically call a dead cat bounce coming off of this huge decline going forward there. And the risk, none of it's changed. It's just sort of a take profit and move on, so to speak. Look for the next opportunities. From a TLT standpoint, this is going to continue to be a really interesting one. There's such a divergence between where rates are versus where the economic growth is, and it's a bit complicated at this particular point because it's not trading to reality. The reality is that with where real rates are versus where the Treasury yields, and it's kind of a strange setup, and it just points to the artificial nature of Fed control. And how does it impact us? Well, it makes a big difference because if you've got an attractive yield, it certainly draws from the equities market. And at this particular point, that's been kept really moderated. Rates should be significantly higher given what we've seen from the Fed and their just crazed desire to tighten. This is starting to become a real factor in emerging markets, and I think you'll see more of that play out as the Fed's reduction of the balance sheet is squeezed foreign markets, and that's causing, it will cause some ripple effects. Everyone's going to be talking about the tariff issue in the G7 meeting and stuff, but that's a little less relevant to what's going on than this desire of central banks to reduce growth, which is kind of strange, but it's not out of line. They've been doing it for a decade. I don't know that they know how to switch right offhand. The abatement in oil prices really helps. That will keep an easing of inflationary pressures, but some of this was already built in from this summer from the early spring rally, and it's not going to change, and that will have a little bit of a ripple effect. Could ease off by the end of the year. It depends on where oil trades and if OPEC's willing to keep that liquidity that evidently was asked for, that extra 1 million barrels a day, supposedly. Gold, it's flatlining, and again, this is probably an interesting opportunity because I think it represents a discount to where it will be going forward. In fact, speaking of discounts, let's put this one up. How fun is this? Bitcoin ended up with a nice DLC spread right about here. And that was up at what, 76.65, and here we are almost 1,000 lower off the open collapse, and pretty much this is at the bottom of the barrel. If we go to our 5K, we can look at the intraday. It was pretty clean. We started off with the nice sell that took us to the bottom. It came off of a clean sell setup, and then pretty much hovered right around the 50% range. We ended up with the gold. Now, this always gets to be difficult because this is a gold that was right below the 50%, but with the open of the next bar, it was right above the 50%, and it just kind of traded sideways for a while, turning into a white candle, interestingly enough. And it kind of went flat across again for a while until the shakeout started turning, and then we reached the high point there. We did get the white candle get filled back, actually, even within like the first bar. We ended up with those blue candles. We're likely to revisit this level, though. We're around the 27.72, so that's a pretty decent point, but it can take a little while before that actually happens. You can see right now, pre-market, we opened up lower off that whole G7 trauma thing, but obviously with the summit with North Korea, that's going to be a positive impact so far. And all it's done is take us back to the highs. We had, again, a secondary gold that happened right over here. And, you don't need my color candle to do it. You can always follow it pretty much directly on your own by seeing it happen. And then it's just a matter of, where we are in the Morgan action. Now, from a risk to reward standpoint, is it really beneficial when I've got it gold candle coming here at the 100%? Not so much. But on the retrace move, it becomes more interesting because at that particular point, if I still have decent readings or develop a new buy signal, then you can certainly jump into that equation. But in fact, it go right back to the highs. In fact, slightly new highs. They were modest. It was a pretty even day. We were just testing the previous range from close back on the Thursday. So this will really be the test because now we're getting into a soft period where a lot of the money is been spent, and whether or not there are any new sellers certainly could create much more of a downdraft than I think people are probably expecting at this particular point. So we'll keep an eye out. But that also can have the same play going to the upside when you have a little bit less liquidity. You don't have the resistance if there isn't an active short maneuvering that we are seeing it from the daily standpoint, at least from ES, kind of flatlined and below the zero. So it's just showing no dominance on any one particular side, which I think is always relevant to keep in mind. That means that we're sort of in a flux period, which allows for fluctuations both ways. So intraday, I'm not afraid to be either long or short, depending on what the signal is. We're just going to have to see how the range develops because we've had some pretty decent moves up, and then we get these consolidation periods that start dropping dramatically, and then we explode out from them again. And just keep looking for that to take place. So this particular point, we're just getting into a little bit of algo interest area right here. You can see the yellow dot form because that's exactly what we've got here on the extreme histogram. And serious input here from buyers at this particular point. We'll see if it's able to hold up for the rest of the pre-market before things actually open up in New York. So we'll just take it step by step. If there are any relevant chart configurations that pop up, I will certainly put them on the Skype chat. As always, though, trade well. We'll talk to you later.